Mehrab Irani, investment manager at Tata Investment Corporation, joins in live on the show with the street view at lunch. Afternoon, Mehrab. Thanks for joining us on Markets at Lunch. First up, what's your sense? Are we staring at the possibility of a breakout rally, or do you think the markets will remain ranged in the near term?
Good afternoon. Thank you for calling me. If you see in the next few days, the first quarter results of FY 2013 will start coming. My expectation is that the top line sales growth will be close to 19%, while the bottom line growth will be muted at around 9%, primarily because of high interest rate and also the forex losses. If you see the EBITDA, I think the EBITDA growth will be close to 15% with a 130 basis point fall in EBITDA margin at around 17%. As far as the valuations are concerned, we are trading at less than 14 times forward price to earning ratio, which is at around 8% discount to the long-term 15-year average. Even on a price to book value, we are at around 2.2 times, which is again at a discount to the long-term average. However, if you see structurally, the ROE has fallen from around 19% few quarters back to 15% currently. So unless that improves, we cannot command a premium on a price to book value basis. However, one positive thing is that the free cash flow yield just now is around 4.5%, which is very good. That is primarily because lot of, though the profit is not happening, but a lot of cash generation is happening for many of the Indian companies. Plus also, if you see the depreciation currently for corporate India is around at a 3.5-year low. So that means that the capex cycle has considerably slowed down over the past few quarters, which we anyway know from the data. So that is one concern. However, since the free cash flow yield is very positive, that is one support for the market. So going forward, a lot of these concerns are that the interest rates are still high and they have to come down. The inflation is high. Monsoon has still now not been very good. Though over the past 2 days, at least there is showers in Mumbai. But however, the monsoon has been not, and what will be its effect on the food inflation, and also what the government will do now. Hopefully, if the PM is the new FM, hopefully we are expecting some good reform measures from him. Plus also what is happening globally. Today, if you see the Bank of England and ECB meeting is there, I think we are hoping that the ECB may cut interest rates from 0.25 to maybe almost 0 or 0.1%. So, and what QE measures they announce. So those are the things which the market is looking for. But I think those factors are already, the market is aware of this and they are factored in. Unless some new negative happens, there is no reason for the market to immediately go down.
Mehrab, what is it that you're expecting from Infosys, considering just days from now and we would be, watching out for the guidance set out by the company?
Sorry, I can't comment on individual stocks, but I think the IT sector, we have to be a little cautious at this point of time. Even after so much rupee depreciation, I don't think they have been able to show a lot of good results. Plus, there is a lot of concern on a lot of large cap companies, etc. So, and at this valuations, I think I would be a little neutral to negative on the software sector.
Mehrab, how worried are you with the progress of the monsoon? I know you spoke about the fact that we've seen rains in Mumbai, but the spread hasn't been as much as the markets would have liked, and that remains a bit of an overhang. If things don't improve in the latter half of this month, how much of an impact could that have on market sentiment?
I think that will have a big impact. I am very much concerned on that, because if you see the food inflation even today is close to 9 to 10%, and if the monsoons were to be bad and the distribution were not good all over India, importantly, I think if the food inflation may in fact rise, and if that happens, then that will leave very little leeway for the RBI to cut rates, and interest rates have been high, which is a very big negative for the markets as of now. So I would be pretty concerned on the monsoon front and hoping some
and the dwindling sales volumes that we've seen from most auto majors, is that a concerning factor? And would you now look at selling into any of the auto majors?
The auto sector, yes, the sales volume has fallen down. Also, if you see, a lot of production cuts have happened. But then certain companies, I think the valuations have been reasonable. And if interest rates were to come down from here on, then I think auto sector would be an outperformer from here on.
And what about the FMCG and pharma pocket, Mehrab? How would you approach these two packs?
The FMCG has been as a defensive. They have outperformed over the last few quarters. However, now at the current valuations, I think most of the companies over there are trading at 25 times plus valuations. I would be a little cautious at this point of time. Particularly, I will have to see how the how their ad spends, etc. increase, and also how the raw material cost is affecting them, because there has been a lot of movement over there. Plus, whether they are able to sustain the top line growth which we have seen over the past few quarters. So at the current valuations, I would be slightly cautious on the FMCG sector.
Mehrab, a quick final word on the retail pack. Obviously, expectations now are there in the market that the government will move forward on FTA and multi-brand retail after the presidential polls. How would you advise investors to play retail stocks?
Yeah, there is a lot of expectations on the retail front, and every day we keep reading news on them. But we have to look at the balance sheets of individual retail companies, because though the P&L may be good, but a lot of the balance sheets are not looking very good. So unless there is some kind of balance sheet reconstruction over there, I think we have to be very selective in the retail sector, though the long-term opportunity is always there.